Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock, so we're going to be going over the latest news updates, price targets, and price predictions among professionals. Then we're going to talk about the latest news updates for Palantir's PLTR stock to determine where that stock is headed and if it's still a phenomenal growth company to own. And then lastly, we're going to be going over one of the companies that you all suggested down in the comments down below, which would be Gevo. So if you want more videos on Sofi Technologies, Palantir, Gevo, or any other stock, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. So this particular author highlights two growth stocks in his article that billionaires are buying, and one of these are clearly going to be Sofi Technologies. However, why are billionaires buying up companies right now? Well, while the markets are down and the overall macroeconomic is negative, the world's best investors are actually buying up very fundamentally strong companies and stocks that they think have good growth potential. This is why billionaires and hedge funds are scooping up their favorite picks at a very good discount, and I agree with them. During times of stock market uncertainty, we want to buy blue chip stocks or companies we know have strong fundamentals so it can pay off for us during the long term. There's really no need to keep a lot of cash on hand as long as you are investing responsibly into very strong fundamental companies, and that would include Sofi Technologies. And this is the mindset behind why so many very successful investors are confident that the stock market will eventually rebound, whether in the next 6 months, the next year, the next 2 years, or 5 years. They know that while the stock market is down, right now is the best time to buy, which is why many billionaires are actually buying up Sofi Technologies. If you didn't know, Sofi Technologies is basically a digital bank. They are a fintech company which offers an all-in-one inclusive digital app to their consumers that gives them anything they could probably need in terms of financial services and or financial products. Sofi Technologies has been hit hard, like many fintech companies and growth stocks, over the last few months, where the stock has actually dropped by around 76.5% from its peak over the last few months. This is one reason why billionaires and hedge fund owners are actually buying up Sofi Technologies and adding them to their hedge funds. Right now, the Sofi stock price trades for $5.81 per share. However, stock professionals believe the company is worth anywhere between $7 and $11 over the next 12 months. As you can see on screen, we can see from their top, the stock price is absolutely crashed, but billionaires as well as some very bullish and positive investors believe that the company will eventually rebound, so that's clearly something to look forward to. Another really good thing about Sofi Technologies is that they are rapidly advancing and they have very lucrative market segments. And what do I mean by that? They are infiltrating personal loans, auto loans, student loan refinancing, which has kind of been their bread and butter, as well as home loans. They also offer checking accounts, savings accounts, and credit cards, among a plethora of other financial services and products. Unlike other fintech companies, what separates Sofi Technologies from their competition? Well, I would say the biggest thing is that they operate as a national bank because they have acquired a bank charter, and that news goes all the way back till last year, which was extremely innovative and smart of the company to land such a fantastic acquisition, to where they can actually give out to their consumers low interest rate deposits, and they can adjust their own interest rate because they are their own bank. This gives them a huge technological advantage over any competition, as long as they are not competing against a legacy bank which can do the same thing. However, the reason why they are also better than some legacy banks is because they are both a fintech company and a bank. This means that they outclass fintech companies because other fintech companies aren't banks, and Sofi Technologies outclasses legacy banks because other banks are not fintech companies. So clearly, from a technological standpoint, Sofi's technology is absolutely amazing. The company's also growing their their overall membership by an astounding rate. And I also want to add that Sofi Technologies is currently managing over 117 million third-party accounts, which equates to a 48% increase from a year earlier. So clearly this is a phenomenal company that many billionaires and hedge funds believe will outpace the overall market during the long term. However, with that being said, we need to make sure that we practice proper risk management. For me, I only have a 4% allocation, and I don't advocate for more than a 5% initial allocation into a particular stock. Now, that allocation can grow over time, and you don't need to necessarily take profits on it. However, if I have a $100,000 portfolio, at maximum, I'm only investing around $5,000 into that company while leaving room to dollar cost average down my average price. So maybe I only invest $3,000 and I use the remaining $2,000 to average down my average cost, because I do believe in the short term the stock price is going to go lower. But over the long term, this does look like a pretty good company, but I would love to hear your thoughts down below. Remember, this is a risky growth company, so it may not work out, and take all price predictions from analysts as well as stock reporters such as myself with a grain of salt. These are just our projections and some guidance, but you should always make sure to do your own research on these companies. The next company we're going to talk about is a big data and analytics company that serves both commercial clients and government enterprises, and that is none other than Palantir Technologies, and we're going to be talking about their PLTR stock. Their PLTR share price currently trades at $7.80, while professionals believe the company's worth anywhere between $6 and $20 per share. This means that the PLTR stock could technically drop lower in price considering the negative current macroeconomic environment, but over the long term, this company could absolutely shine. The reason why Palantir is in the news today is because they were ranked as the #1 in the worldwide artificial intelligence software study, which was conducted recently, and this is a huge competitive advantage for Palantir Technologies. They were literally ranked the #1 artificial intelligence or AI software platform according to the IDC. And this is really good because the overall AI platform software market grew by around 36.8% during the year of 2021, which equates to a $14.2 billion industry, which is absolutely insane. The report also found that early adopters that intend to invest into AI platforms right now before it really takes off are extremely innovative, and they're making a lot more money than other investors, at least over the past 3 years. So overall, this is very, very good. There's also been some other updates for Palantir Technologies, such as them extending contracts and getting some rewards, but in this video I just wanted to highlight that according to the IDC, they are the #1 ranked worldwide artificial intelligence software company at this time, according to that particular study. We also have the IDC's group vice president of AI and automation come out and say this about this particular study, and I quote, "In a time where AI is having a profound impact across various industries, the software providers that can continually innovate and drive success for their clients are more important than ever. Palantir has demonstrated its clear leadership in AI on a global scale from both a market share and revenue perspective, and are on a trajectory to continue to do so." He goes on to say, "We predict that the growth of the AI sector is nowhere near slowing down, and we are excited to see how Palantir continues to separate itself from the competition by solving the toughest business challenges out there with their platforms." End quote. So overall, this is phenomenal because the IDC is literally praising Palantir for their innovative technology because they believe that they are the most competitive AI technology platform and software company on the market right now. However, because this industry is extremely competitive, who knows if they will continuously solidify and hold that position, but overall, this is very good news. The CEO and co-founder of Palantir Technologies, who is Alex Karp, even had to say this in response to the IDC study, and he says, and I quote, "The most significant arms race of our time is to construct the next generation of AI that is both effective and responsible. While most companies are content with addressing the idiosyncratic needs and inefficiencies of select customers in a subset of industries, the market we seek to address is essentially unlimited." The development of our software is not intended to merely magnify in a linear and direct fashion the output of human labor. Instead, our software aspires to augment and accumulate the productive power of the human mind, end quote. And basically what he's saying is he doesn't want Palantir to specialize in one particular industry or sector. Palantir is going to be used for a plethora of different sectors and industries. Particularly, he's referring to Palantir's Foundry platform, which will be used for their commercial clients. And as of late, Palantir's software is currently deployed in more than 50 different industries, which would span environmental industries, manufacturing, health sciences, finance, and the government. So overall, this is absolutely fantastic news. However, speaking about what you all want to hear, there was a comment in last video where someone wanted me to review very quickly Gevo. And Gevo is a very interesting company. Now again, like the other two, this is a very risky growth company. However, I would say Gevo is substantially more risky than Palantir and Sofi. In terms of risk, I would say Gevo is the most risky, and then Palantir coming in second, and then I would say Sofi is the safest bet out of these particular companies. But with that being said, these are all very risky growth stocks. The reason why Gevo is going to be in the news today is because they recently were selected to gain around $30 million of funding potentially from the USDA. If you didn't know, Gevo is essentially a renewable fuels and technology development company, so they're going to be in that renewable energy space. Right now, the current stock price trades for around $2.50, while a handful of analysts believe this company should be trading at least at around $10 over the next 12 months. But again, this price target we only need to use as a guideline. That's not a guarantee that Gevo will be trading at $10 over the next 12 months, because if it was, you could literally almost 5x your money. After the U.S. Department of Agriculture has selected its Climate Smart Farm to Flight proposal for funding with an award ceiling of up to $30 million, and Gevo is clearly in the running of this. Gevo actually said its project was one of 70 that the USDA had in its first pool of potential people to give this reward money out to. And the Partnerships for Climate Smart Commodities funding has a total opportunity of giving out around $2.8 billion. So overall, this is very good for a company like Gevo. Now, am I invested in Gevo? I think I have like a 0.2% allocation to this company. I think the potential of this company could be very high, but I am not as bullish on this company as I would be on Sofi Technologies or other companies that I am invested in, such as the major blue chip companies like Amazon, Google, Microsoft, Facebook, PayPal, Apple, Walmart, Target, Home Depot, Pepsi, Coca-Cola, Bank of America, etc., etc. But I am always looking for a company in the sustainable energy space, and Gevo seeks literally to build its future as a sustainable aviation fuel supplier through their successful segments. And one of them, which is really good, is that Gevo already has an agreement with American Airlines, which is a very mainstream, very large airline. So that definitely is very good, and hopefully Gevo can continue to scale. But overall, I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.